I like to talk about ego investing and value investing, especially as it pertains to individual investors that traditionally work with financial advisors, like the ones that work with Bonrian. Is there something you're doing that you think particularly plays into that space of ego investing, where it's just a really unique thing that you want to associate yourself with in that kind of ancillary space that you guys play into?
Yeah. So it's funny. We have this question a lot, and candidly, we've made a lot of money based on people investing for the ego reasons. Like I tell everyone, we invest for IRR. We don't invest for ROE, return on ego. So I find a lot of people who jump into the hotel space, because they want to, they want to own a nice luxury hotel, or they want to own a hotel property. They want to be the hometown hero on a hotel, on a restaurant. And they turn out to be, a lot of cases, really bad investors and bad investments for these investors. Because they're investing for the wrong reasons. We have a film finance business that we get a lot of questions on, and it's really a receivable finance business. It's not, it just happens to be that we're financing the production of movie films. But what's happening is we're actually going in and financing the pre-sales on the distribution rights of these films that are being made. And typically when a film is made, certain investors will just invest into the film without any pre-sales. They're taking on that creative risk. We're not willing to take on creative risk, meaning we don't want to have to question if the movie is going to have any box office sales, if it's going to have any, buyers like a Netflix or whoever, or Amazon is going to buy it at completion. We want to know on the front end who's buying these films. And then we're also taking, as we're making these loans to these films that are being produced, we're getting a pledge of these, agreements where, someone's pre-selling, this movie. We're also getting all the tax credits, because a lot of these films are being made, here in the U.S., like in Georgia, has a huge tax credit program. Kentucky, we've financed several films over in Australia, has a great one, and we're getting that as additional collateral against our loan. So on the surface, it looks very ego-driven. But once you start to realize what's really happening, it's mispriced risk to the benefit of investors, because we're able to, to go in and basically provide a senior loan. So we're attaching usually at, call it 70 to, 80% of the total production cost of this film. This film will have a bond in place to effectively guarantee that the film will get completed. So we take away the production risk, and we take away mitigate a lot of the, creative risk by having those pre-sales and tax credits as collateral on our loan. And so, we feel like it's mispriced risk because we're able to generate really outsized, really good outsized yields to what's really happening. And, it's asset backed. So.
Very cool. Film financing and film funds are definitely one of the areas that we've seen interest, particularly from that ego perspective. So I totally can appreciate that. The story, it's like sports rights funds in that way. It's sexy.